Welcome, folks, to this week's edition of the Startup Tank Climate Investor Pitch Show. If this is your first time, I'm your host, Matt Ward. I run PearVC, an early stage climate accelerator. We invest in companies that will move the world forward, hence the tagline. You can find out more about us and what we do at forward.vc. Look into our early stage climate accelerator, which is always open and evergreen, i.e. bringing in 1 to 2 new pre-seed to seed climate companies per month, investing and helping them grow, scale, land new customers and clients. And this is the Startup Tank, where we run a Dragon's Den Shark Tank-esque pitch show with some tough climate investors. We've got 2 pretty awesome ones today. We'll share a little bit more details with them or about them in a second. If you're looking to apply to an upcoming session, we do this every 2 weeks on Mondays. So our next session is March 20th, and we have April 4th, April 17th, 5 to 7 p.m. CET. To apply and for more details, thestartuptank.com. And then if you are looking to fundraise, I guess our one little pitch would be, we've got a VC database, 950 plus funds, incubators, accelerators, and ZVCs. Folks we've been connecting to and building into our network, and you can filter it all by stage, sector, geography, and check size. That's available at forward.vc/VC database. You can get it all, and that should help accelerate your raise in a pretty serious way. Today, I'm joined by 2 incredible founders. 2 incredible investors, Shanice Mohiniani, I'm terrible with names, of PearVC, and Parikshit Sharma of IndieBio. You want to go first and tell us a little bit more about you and what you do, Shanice and Pear?
Yeah, I'd love to. Thank you for having me. Hey, everyone, I'm Shanice. I'm a climate investor at PearVC. Pear is a pre-seed and seed stage focused fund, and we've been the earliest investors in startups now worth over $100 billion. On the climate side, we've backed a lot of companies such as Aurora Solar, FarmRaise, Nobel Foods, amongst many others. And I'm excited to be here and meet all the startups presenting.
And then that brings us to Parikshit.
Hello, everyone. My name is Parikshit, and I invest with IndieBio. We're part of SOSV, which is one of the most active early stage investing funds in all things deep tech. And the fund invests in one of 3 major pillars. One is deep technologies that make people healthy. So this is therapeutics, medical devices, diagnostics, and then the later 2 are more relevant to this session today. One is what we call planetary health, so technologies that will make the planet healthy. So we have a pretty large portfolio of decarbonization and sustainability startups. And we have also recently started investing in resilient, robust supply chains to make, just in wake of deglobalization and the havoc that supply chains witnessed in the last 3 years. Yeah, we love first-time founders. We love really technical founders, and we pride ourselves on being the first check-in at formation stage most of the time. Happy to be here and learn more about the startups that we have presenting today.
Two great investors. Thanks for joining, guys. And I'm again with Forward VC, founding partner there. We run our climate accelerator. We do that every month, every day. We're bringing in 1 to 2 new companies and helping them kick butt, take names, and land 2 to 5 new major customers, corporates, or pilots, so they can really beef up the business and scale, not just fake the J curves with some advertising dollars, but really have a sustainable system. Learn more at forward.vc. We've got a climate founders Slack, a climate investor Slack. You can join both of those. Great places to network. And this is the Startup Tank. So now to have a little bit of an overview of what the program's going to look like in case this is your first time. First homework, hit the subscribe bell on YouTube or wherever you're listening to this to make sure you never miss a thing, A. And B, we've got 5 incredible companies we'll be presenting today. Again, pre-seed to pre-series A, climate companies that are making the world and the environment better. They'll have 5 minutes to pitch our sharks, so to speak, and then about 10 minutes of Q&A afterwards. At the end of the session, we'll choose between the investors who are climate startup of the night is the folks or the team that we find most interesting, appealing, we'd want to set up a meeting, potentially invest in, see the biggest upside with, and they'll be crowned startup of the night, where they will have eternal glory forever. We're working on putting together some prizes for them, but right now the big prize is there's a lot of investors out there watching and listening, and well, if you're an investor and interested in these type of companies, reach out. And if you're interested in learning more about us and what we do, we've got an accredited investor syndicate, which you can find, of course, on our site, along with some other things we can't talk about. And now let's move things into the section of the pitching session of the startup tank. First and foremost, I think would love to hand things over to Joe Riblet. Joe, do you want to take things away and share a little bit more about you guys and what you're doing with Viritech?
Yeah, thank you, Matt. Can I just check you can hear me okay and see my screen?
Looks great. You will have 5 minutes on the clock. You'll have a 1 minute timer, and your 5 minutes starts now.
Okay, thank you. So very good to meet everyone. I'm Joe Riblet, the Director of Finance at Viritech. And I think I'll start by just making a general observation that so much of the narrative around the shift to sustainable fuels and zero emission transport focuses on kind of sinister regulation and top down, I suppose, the regulatory stick, really. And what Viritech's about is creating a future where people move to sustainable solutions because they want to, as opposed to because they have to. And for us in the hydrogen space, that really means providing viable unit economics for operators. So let's dive into the detail. The problem we're really solving is that automotive manufacturers at present can't solve the demand for zero emission trucks. Demand is increasing rapidly, 44% increase in truck activity between now and 2050, but there's regulatory pressure demanding that these trucks are zero emission. The existing zero emission solutions just are not adequate. So if you have a 44-ton truck, you need 5 tons of batteries to power that truck, which equates to a roughly £38,000 loss per truck per year due to the loss in payload. Typically, we see 2% margins across this industry, so loss in revenue per truck like that is simply going to cripple the unit economics of the industry. Lots of people think, well, if battery electric doesn't work, hydrogen's the right solution. And although we would agree, most of the hydrogen solutions today are still very heavy. They still use very large batteries, and they're often very volumetrically inefficient. So they're still quite cumbersome to actually package and put on a truck. Our solution. So we provide automotive manufacturers with the best performing, lightest, and most space efficient hydrogen powertrain technologies. We have a dynamic energy management system. It's a power electronics, hard and software series of products, which reduces battery size by 95%, and there's a lithium reduction accordingly, as well as the saving benefit. We also have a pressure vessel solution which uses the inherent strength of hydrogen pressure vessels as a structural part of the chassis, so that although the weight of the vessel itself is still very heavy, the net additional weight is very low because you can reduce some of the chassis weight. And what we're really offering is the same unit economics as logistics operators have got used to with their existing diesel trucks. We really think that is the key motivator here to attracting people to zero emission solutions. Our intellectual property, so we're an IP heavy company. We don't produce fuel cells at one end of the powertrain. We don't produce the motor at the other end. Both of those are quite well established industries with some major manufacturers. We are agnostic to which of those we use. And what we do is we integrate those two ends of the powertrain. So we cover the kind of enabling technologies between the two, be that DC-DC converters, fuel cell controls, or high C-rate batteries, which have very high rates of charge and discharge. And as a result, can be much smaller than traditional batteries on hydrogen vehicles, or the Graph Pro hydrogen pressure vessels, which, as I mentioned, are a structural part of the chassis, so can significantly reduce weight. Our market opportunity, I won't dwell on much other than to say that the automotive powertrain market will be at around 115 billion market opportunity for Viritech, and lots of our technologies actually scale to marine, aviation, and static power generation industries as well. But we're not focused on those for the moment, but the scale of the opportunity here is extremely broad. We have a licensing business model, so we plan to be the arm of hydrogen automotive technologies. What that means is we will license our technology to manufacturers for a one-off fee, and then take a royalty payment for each sale they make of the product that they will then manufacture and distribute. The reason we've chosen that model is it's very capital efficient. We don't have to invest upfront in significant capital expenditure, factories, lower skilled engineers, etc. And we can scale very quickly. So because we have a licensing model, we're using the existing manufacturing incumbent capacity. And we've already got some pretty significant partnerships with manufacturers in the works. In terms of our traction, this is quite a detailed slide, so I'll just pick out a couple of points here. Under partnerships, you'll see Anand Group. We recently signed them up this year. They're the largest tier 1 manufacturer that supply India. It's a really exciting opportunity for us to license our technology to Indian, Asian, and SAARC markets. So super exciting opportunity there for us. And then just, I think the particular thing to flag under funding and grants, you'll see that this year we've been awarded over 2 million in UK government grant funding projects to be spent over the next 2 years, which is really significant for us in terms of accelerating our development pipeline and obviously leveraging
30 seconds.
Your investment. Thanks, Matt. I suppose I'll also, since I got 30 seconds, I got a bit more time than I thought. Under technology development, you'll see our mule vehicles. So we have 2 operational mule vehicles. We pride ourselves on testing our products on vehicle and iterating very quickly as a result. So we test our products every 3 hours and improve them every 3 hours. We operate in a very lean way.
And time is up. While I'm bringing in the other panelists, tell us quickly about the founders.
Thanks, Matt. I'll be sharp. So Timothy Lyons, our founder, is an ex-investment banker, 2 previous fintech companies, which he exited for 10 and 100 million pounds. And Matt Fawkes is our CTO. He's an ex-F1 engineer with previous experience actually founding and exiting his own automotive company. So very strong technical expertise there too. I will leave this slide on screen, but I'll be well behaved, Matt, and stop talking.
No worries. One quick question from my side before I hand things over. Usually the founders pitch. Why are you here? Let's just go straight to it.
Yeah, it's a good question. So at Viritech, we really believe in kind of democratizing responsibility. We are actually currently crowd raising at the moment. We have a crowdfunding campaign open, and part of that is about sharing the vision. You know, our founders are really significant parts of the business. We've been around for 2 years, and certainly for the first year, they were driving a lot of the interest and a lot of the development that Viritech made. But democratizing responsibility, democratizing ownership through crowdfunding, it's all part of building the kind of hydrogen future. And as director of finance, I'm responsible for capital raising, and as a result, I'm here pitching. Yeah.
So if it's a crowd raise, how much are you guys raising, and what are the terms? I'm assuming you can share that then.
I can share that. So we have a limited amount of capacity on our crowd raise. We've only got consent for about a 2 million raise, which we're currently doing through a convertible. Shortly after that is our 5 million target price round. So investors are open to either enter the price round or the convertible round as suits them. We're expecting the price round to close kind of at the end of Q2, beginning of Q3 this year. So there is a bit of a time delay, which may suit some better than others. At the moment, we're just offering that discounted convertible to the crowd, really with a view to keeping our pace of development up while we raise our 5 million price round. We need to get a bit of cash in the door. We've got, as I mentioned, we've got a huge amount of projects on our doorstep at the moment, and the convertible is really funding those projects. One of which, to give you a flavour, is a hydrogen truck. So we're producing a hydrogen truck in partnership with an automotive consultancy, whose name I can't reveal at the moment, but are an extremely well-known consultancy, and that will prove out our product to the heavy transport market, which is obviously extremely key for us in the hydrogen sector.
Awesome. Parikshit, Shanice, take it away, ask questions. Don't feel the need to raise hands, etc. Just go for it.
Yeah, happy to kick off. So Joe, noticed a number of different focus areas, and it seems natural, like you said, to focus on heavy goods or commercial vehicles.
Mm-hmm.
You mentioned a partnership with Anand Group. How are you prioritizing your partnerships with OEMs, and how do you go about establishing those relationships today?
Okay, that's a good question. So I think I'll start with the Apricali. So the story for Viritech really began with a Croatian company called Rimac. They set out to build the world's fastest battery electric vehicle. and they did so very effectively. Reached the end of the program for the hypercar, battery electric hypercar, and realized that actually along the way they'd created some really exciting tech. And since then, almost every major automotive OEM or tier one manufacturer solicited their advice or licensed technology from them for their own vehicles. And their route to commercialization really focused more on the technology than it did on the car. And Viritech was really born from the same ethos. So when Matt and Timothy sat down, they decided that the company's first project was going to be the Apicali car on screen. Designing technologies for a hypercar is extremely exacting in terms of requiring very high performance, but in a very constrained space from a packaging perspective, and also requiring extremely lightweight, which is obviously critical to the trucking sector, which is where hydrogen applies most obviously. So the Apicali was our first project. It was our development platform for our core technologies. And we unveiled the show car, which we've got on screen here, earlier in 2022. And following that, we had such a rush of inbound inquiry. We often joke at work that this is on screen is our business development function. You know, once we'd released the car, so many people wanted to talk to us that we had plenty of opportunities on the table. And in terms of selecting which of those we decided to go for, we actually looked at the value chain and the ecosystem around hydrogen powertrains, and we built up a core product development roadmap, really, which I'm happy to go into in a bit more detail, but covers the kind of core technologies that I covered earlier. And we looked at the right complementary partnerships. So we needed partners who would provide, for example, vehicle build, but not powertrain expertise. So it suits us to partner with people that want to build cars and suspension and all those bits that we don't do, but are looking for someone to marry together a fuel cell and an electric motor, for example, and then we can fill in the bits in the powertrain. So that was how we went about selecting partners. And we've got an announcement coming out about one of our government grants in the next couple of weeks, which is with a very significant American OEM for their light commercial vehicle application, which is a very nice example where they provide the vehicle construction expertise and we provide the powertrain technologies.
And you know, when it comes to hydrogen, there's a lot of debate around the hydrogen supply chain and the network of hydrogen producers. You know, there's so many colors now. It started with green versus gray hydrogen, and now people are talking about turquoise hydrogen, blue hydrogen, violet hydrogen. How are you guys thinking about the original feedstock and procuring hydrogen for your trucks? Or you leave that to the operating company of the truck and don't care?
Precise. I mean, so you slightly answered the question there at the end. I mean, our business model isn't really about providing operators with hydrogen solutions. As I said, we're fundamentally a licensing technology. Having said that, it's very much our belief, as I said, that the hydrogen future is very much a shared effort, and incremental advantages in every part of the ecosystem only help Viritech. So, for example, we're based at Myra Technology Hub in the UK, which is the center of automotive innovation in the UK. And we actually introduced a hydrogen infrastructure company to Myra, and they've now gone and set up a hydrogen filling station at Myra. So, you know, where we can, even at a local level, we're happy to kind of build out and help build out the infrastructure through introductions. In terms of the color of hydrogen, as you say, it can be difficult to keep up with the latest colors on the rainbow. But in general, you know, we're very much in favor of hydrogen adoption. Some of that at the start will be gray hydrogen. It's not the end goal, but we don't see that as hurting. It's very much helping the end goal, really, because it's incremental steps. You know, in the same way that converting the electricity grid to an entirely renewable grid will take time, so converting hydrogen from grey to green will take time, and having more vehicles operating on hydrogen in the near term only helps us. So, that's a kind of a broad view of it.
What do you view as the biggest challenge to scale out the tech in the company?
I think there's a few things. So I'll give you two potential challenges. One is at the moment in the hydrogen space, you know, it's not an established market. It's still an embryonic market, which means people don't know exactly what they want. That's quite good for us because it means we've established a strong technology beachhead. There's not an established status quo about what a hydrogen car looks and feels like. But at the same time, it's not the case that there are loads of RFQs with very specific specifications saying, we know exactly what we need from a DC-DC converter, and we have a million vehicles needing that technology. We're in the fortunate position of providing a solution as well as a component, which means that most of our engagement, for example, with Anand Group, our Indian partnership, they actually approached us because they needed a hydrogen solution as opposed to a hydrogen component. They had very established manufacturing expertise, but they weren't really sure how to get into the hydrogen economy. They didn't have hydrogen expertise. And what we brought them was a complete solution that not only provided the components that they needed to license, but also actually defined what the right specification for a vehicle is. But that is a bit of a challenge, that it's an opportunity and a challenge that there's not a defined status quo, and to a degree, we have to kind of lead the witness a little bit in terms of defining what a vehicle looks and feels like.
Yeah.
And the second real challenge I would say for us is the cost of fuel cells. There's no question that by 2030, let's say the cost of fuel cells will have come down very significantly. And that when we talk about offering operators unit economics that are an improvement or level with diesel unit economics, we're assuming that fuel cell costs have come down.
Right. But isn't that unit economics on an operating basis, not on a CapEx basis?
That's true, but we also talk about total cost of ownership, right? So total cost of ownership combines maintenance and operating with also the CapEx expenditure off of that. But you're absolutely right. We can have separate conversations about both. But on the topic of fuel cells, we're forecasting cost parity by about 2028. Most major manufacturers think that there'll be parity between a fuel cell and a diesel engine by 2028. But that is a pretty significant obstacle to the business, and we have a strategic plan in place for reducing our exposure to the risk of fuel cells, actually with a solution that meets a kind of retrofit and a slightly lower cost demand in the near term, precisely to kind of guard against that risk a little bit.
And specifically, sorry.
No, please go ahead. You go ahead.
I was going to ask specifically for the powertrain and your technology, what are the key pieces that still need to be de-risked from a technological perspective?
Okay, so I'll just get my diagram back on screen here so we kind of know what we're talking about. Fuel cells on the left of the screen, very established.
You got to start staring your screen. Your screen sharing is not on right now, just FYI.
Oh, okay. Thank you. How's that? So on the left of the screen, we've got fuel cells, very established. Apollo actually flew to the moon with a fuel cell in the 60s. They've been around for a very long time. We don't produce them. DC-DC converters, on the other hand, at the moment, I would say our main competitor in the DC-DC space is a company called Brucer. They produce a DC-DC which costs around £20,000. Typically, you would have 2 DC-DC converters on a hydrogen vehicle. Our DC-DC converter will be priced at around £15,000, and you'll only need 1. I can go into the technical detail a little bit, but just to say, that's not really a technological risk. Actually, it's more a case of the development approach. Having 2 DC-DC converters is a legacy of a historic way of thinking where fuel cells are used on battery electric vehicles to top up the charge when the battery decreases. But actually, our architecture uses the fuel cell as the prime source of power on the vehicle, not the battery. And then the battery is just used to manage the transients between different outputs from the fuel cell. So that's quite a nice example where I would actually say there's not a huge amount of technological risk in the development. It's really a case of commercial demonstration and then rolling out more broadly. As I said, because of our development approach using mule vehicles as opposed to bench testing, we are actually developing products in a live environment. We iterate very, very quickly, and so we are, I would say, reasonably well insulated from the sort of technology risk you might be thinking of, where it's very unlikely that we're going to spend 6 months working on a product, put it on a vehicle at that point, and then find out it doesn't work. And as I say, we're operating around TRS 5 or 6 at the moment, so most of our technologies are on vehicle at the moment.
How much capital do you need to reach commercial scale?
And
how much time?
That's a good question. So if I refer to our 5 million raise at the moment, that will get us to, I would say, accessing niche opportunities. That means fleet trial opportunities of around 50 trucks. Although we actually have an opportunity that came in the door literally this week to serve about 20,000 trucks by 25, which is pretty interesting opportunity. So it sort of depends what you define as scale. We're a very ambitious company, and if you're talking about our kind of end game, where we're producing 300 million plus of revenue, that's a kind of 2028 onwards at the earliest time scale. As I said, that's linked to the cost of fuel cells coming down. But for the near term, we could be cash flow positive following this 5 million raise. We won't be, because we want to keep growing and stay on that trajectory. But the 5 million now is really focused about getting from TRL 5 or 6 to commercial application, first revenues, at a pretty strong gross margin of around 70%. So
yeah, if I can ask a question related to that, what are the main pain points of your first adopters that are not technological? In other words, if they're completely bought on your technology and the promise of hydrogen and not battery electric trucks, what are some of the things that keep them from adopting your technology, regardless of their spirit and interest in your tech stack?
That's an interesting question. I think it's in part the infrastructure question that you mentioned earlier. There is an element of our sales process that we're not responsible for. We are, or at least we don't have jurisdiction over. We are partnered with infrastructure providers, and as I said, we'll introduce them to clients. But to a degree, there is a macro market shift that's required to really see mass adoption of hydrogen, and that's not something that we can influence hugely strongly. That's not to say we can't influence it at all. We have an extremely iconic hypercar as the kind of icon for the business, and as a result, we actually have carved out a space as an industry leader and a thought leader in this space. So we can move the market a little bit in that regard. At a more micro level, I don't think there are huge obstacles. If companies are producing fleet trials and they want to get a hydrogen truck up and running in the UK, they come and speak to us. There's not a huge obstructive from their end. It's really just about us raising the capital and getting the products out to market. I think that's the kind of primary obstacle which we're addressing through our capital raise at the moment.
Got it. Thank you.
Any last questions, Parikshit or Shanice? I guess my last question before we let you off the hook would be, who do you view as your biggest competitors and why?
Sure. So at a macro level, our biggest competitor is is really battery electric, the move to battery electric. I think for the reasons I've outlined, actually, that it doesn't really need to be a competitive decision. If you ask me whether hydrogen or battery is the future, the answer is very simple. It's both. Battery solutions work very well for lighter vehicles. Hydrogen's a much more logical solution for heavier vehicles. At a more micro level, the automotive industry has changed a little bit in the last 15 years. It's historically been a very conventional industry driven by large incumbent players doing things in a reasonably straightforward way, and Tesla kind of blindsided everyone. It's very unusual to see an OEM do as well as they have competitively, and we've seen of late some other stocks, including Rivian or Arrival, for example, have really suffered trying to compete with some of those established OEMs. And so we really set out with a model that wasn't going to take on toe to toe the OEMs, the established OEMs, as Tesla had done. We see Tesla as very much an exception to the rule. And so our ambition is to be as complementary as possible with the established ecosystem. And that's why we have a licensing model. So the automotive industry is not short of manufacturing capacity. There are very well established tier one manufacturers for everything from semiconductors to power electronics components to pressure vessels. What we do is we provide the enabling technologies that enable them, and the innovative step really to enable them to accept technological change and adjust their manufacturing capability to accommodate future demand and the zero emission demand that we're seeing now. So in general, I would say we're complementary with the large incumbent players, even at a more micro level. The company that I mentioned who are aiming to produce 20,000 vehicles by 2025 approached us. They thought we were a competitive company when they first came across us, and then actually realized that again we're quite complementary because we have different parts in the ecosystem, different parts in the value chain. In general, we really endeavor to kind of fit into other people's solutions and be as complementary as possible.
Very cool. Well, thanks then for pitching. And I would say we keep things in the hydrogen economy and we hand things over to Seth with New Day Hydrogen to share their views of what the future of hydrogen looks like. Sound good, Seth?
Sounds good. Hopefully you're seeing my screen now.
It is up there. You are good to go. Let me know, and then I'll start your clock.
Excellent. Thanks so much. Ready to go. As we learned from Viritech, thank you very much. Hydrogen helps fleets reach zero emissions in ways that batteries simply cannot. Specifically, it refuels vehicles in minutes rather than recharging them over hours, making it particularly well suited, again, as Viritech noted, for heavier duty diesel type vehicles. So we also see hydrogen complementing batteries in the future, very much in the same way that diesel complements gasoline today. But as many recognize, there's an infrastructure problem here with hydrogen and a long-standing chicken and egg issue, with some quipping that hydrogen is the fuel of the future and always will be. We have a way at our company to overcome this problem now, rather than waiting for the indefinite future. And so speaking of now, there have been some big recent announcements for green hydrogen. And here is a sample of them. And what's important to note here is that we're talking about production of hydrogen, green hydrogen in the tens of tons per day, with the impetus of bringing down the unit cost for green hydrogen. Obviously, this scale represents a very large step away from today's current production and use of hydrogen, which is really almost nothing in hydrogen fueling. And the problem is that use. As far as vehicle fueling goes, no stations exist outside of California. And California has gone after the commendable but wrong target of passenger vehicles. This has forced build out of a network and has failed to match fueling capacity with the offtake. And therefore, these projects have been saddled with low equipment utilization, probably as low as 20% across the California network. So we see this production at scale and the larger scale as actually worsening hydrogen's chicken and egg problem for now, making a large step even larger. In contrast, we feel strongly that a ramp is needed to connect today's reality with tomorrow's leap to a hydrogen at scale future. Our approach involves meeting customer fleets where they are today at that zero hydrogen adoption level. Our approach focuses on centralized fleets, so there's no need for that day one fueling network. Our approach makes hydrogen on-site, so there's no worry about delivery hiccups that have plagued California's system. And finally, our approach makes hydrogen from water, so we can scale it down to serve as few as 10 to 15 vehicles, not hundreds or thousands as would be required in that tons or tens of tons per day capacity range. With our manufacturing partner, we've designed a modular system that maxes out at only 200 kilograms per day. That's about a tenth the size of the large stations out in California. Our entire system fits in just 3 containers that only need water and electricity as inputs. Most important, by working with our fleet partners, we know the fuel demand on these stations in advance, and therefore can keep our equipment utilization high and affordable hydrogen available for our fleet partners. Just like with Viritech, we see a very large opportunity here, multi-billion-dollar market potential, if you believe Princeton and McKinsey, and we do. When this goes big, it goes big. What is important is starting now, and that's exactly what we're doing with our initial project here in central Denver, Colorado, that is, US. Interest and support for this project is coming from, at this point, 7 name brand fleet partners so far. Further, we've been awarded a $250,000 grant from the state of Colorado to catalyze this initial project, and have already held kickoff meetings and second meetings with our fleet partners this past February. We see this initial microhub approach as replicable and repeatable across North America. And we've already started pipeline conversations with entities on both coasts, as well as in Canada. Our project timeline anticipates a seed round closing soon and is followed by a Series A to get us to 5 microhubs. Beyond that, we move into equipment lease financing to support further, faster growth. We hit 50 microhubs by the end of 2028 with 12 million EBITDA.
30-second warning.
Okay, thank you. By 2023, we achieved nearly 200 microhubs and have 58 million EBITDA and 75% IRR for investors. In this manner, we've established early market share and become a good target, we think, for M&A from those large production players we talked about. Today, we're a team of 2 founders, lean and with a simple cap table, but we have deep experience in sustainability, startups, project management, project delivery, and operations. Most important, we have the drive to carry this operation forward.
Time is up.
2 years to developing our approach and are ready to take it to the next level.
How much are you guys raising quickly while I bring the other investors
There
in?
it is, yeah. 3 million seed. That unlocks that $250,000 grant. Completes our first project in Denver, gets it up and running, along with priming a couple others and further getting our pipeline underway so that we can meet those growth projections.
Very cool. Then I would hand things over to Shanice. Do you want to take things away?
Let's do it. Well, first of all, really excited about the hydrogen economy. So great to see 2 startups here on that front today. 2 questions for you, Seth. The first is, when you think of the climate capital stack, how are you thinking of project finance versus venture capital for funding this? And then the second question is, can you give us more context on the scale of the centralized fleets that you'll be working with today?
Yeah, definitely. So as far as the capital stack goes, I'm anticipating that to get to those first, prove out the model, get our stations implemented, show that we actually can locate these customers, develop these micro hubs, both the supply and the demand. That really the initial dollars that come in are probably VC. That said, we are aggressively pursuing grant applications and opportunities there to try to extend any kind of a runway that we would get, or potentially decrease that Series A raise that I was speaking about. Beyond that, we believe that once we've proved out the business model, we can move to that equipment lease financing capability, or a project financing capability, and start layering debt in here on top. That's a little bit less expensive, of course, than the VC money. But anyway, so obviously we're going to start with VC, I think, but we would try to use as little of that in the future as possible, to protect current investors, and obviously to make our projects leverage that much better. As far as a context on scale, I think that really is the important component of what we're doing here. We're, as I indicated, looking at probably 10 to 15 vehicles per micro hub in order to support the capacity utilization that we feel is necessary to get to affordable hydrogen. So this means that we can actually start looking at smaller fleets and groupings of fleets in order to, like we're doing here in our Denver project, trying to assemble, 7, 8, 9, 10 fleet players in here, so that each one of them is only talking about 1 or 2 vehicles on their own. So that helps. But that said, some of the players here we're talking to are utilities. They have, hundreds of vehicles that potentially could be, converted over to this. So with success of this project, potentially, they could take a small portion of their fleet and start turning that over to hydrogen consumption, hydrogen use as part of their normal turnover and adoption into zero emissions.
What's the range going to be for hydrogen comparable to diesel or gas? So how many hydrogen stations are you going to actually need?
So that's again, another, I think, important part of what we're doing is that we're not trying to initiate a network day one, not trying to boil that ocean as they're doing out in California right now. Rather, we're going after centralized fleets. And really the important component there is the ability to refuel, replenish that range on these vehicles in a very rapid manner, minutes as opposed to hours. So, the range on it depends, of course, on the vehicle size, depends on the operator, depends on, ambient temperature or other considerations. Most of these, obviously hit us in our normal gasoline or diesel vehicles today, but we're relatively insulated from those because we can refuel so rapidly. When you move into a battery world, the penalty gets significantly higher for doing that. And so, for example, there are transit systems that have centralized charging for their buses, but are also adding range extenders, at the end of routes, so that the bus driver can take a 30-minute break to just top off a little bit and be able to continue servicing that route. And then there are just some routes that are just too long and that really are not going to be a candidate for reasonably for batteries ever.
Can you talk a little bit about the differentiation of your technology from all the other technologies out there that are using a similar approach of solar energy plus water as inputs, and how do your techno-economics work out? I'm not clear what the edge here is with your technology versus existing approaches in the market.
Yeah, so the edge here is that we're going after and we're doing the hard work of assembling these hubs, both that supply and demand, and that we're able to do this, with a reasonably sized egg, the chicken and the egg at the same time. Getting to that problem, whereas if you just start, making more and more hydrogen, it doesn't help the economics around the system. So we are an integrator of the technology that goes inside of our containers. That gives us, ultimately, a price and efficiency advantage going forward as we proceed down the experience curve and are able to take advantage of, of manufacturing capabilities that start taking the cost for the main component of what we're doing, the electrolyzer, down. Rethink Energy thinks, for example, that price is going to go down by as much as 85% over the next decade. So we would like to follow that down as we go, producing cheaper micro hubs, cheaper hydrogen as we go forward. But as far as actual hard technology, that's not our first primary concern here. We're really trying to get out, storm the hill, where there's a lot of white space opportunity, particularly over here in the U.S. right now, and grab that early market share so that we can be a very approachable target for M&A activities from some of the really large players that are on the way, thanks to the bipartisan infrastructure law and other very large incentives that are available here in the U.S. right now.
Are there any network effects or defensibility? Like, the one thing I would worry about is you help build this out, you help bring the prices down, you help do everything so that your competition can come and cut your throat. And there's lots of other players that come in and the prices get dragged down, and it's the winner is the last one. The winner is not the first one. It's the last one you think of. Yeah,
and I agree. I think there's absolutely that risk that we get out and we're the guys that get shot in the back if the scenario that you're playing out is the one that takes place. But what actually happens, I think, is that we get out, we initiate the early market in a particular locale, and we have contracts on the hydrogen that's sold, and those carry forward. Eventually, yes, I agree. There's going to be, the big green hydrogen producer, the refinery with the delivered hydrogen option that is able to undercut. The nice thing there is that we still have that relationship with those fleets in place, And really all we do is pull out the electrolyzer and move that to another, more far-flung location that is actually extending the network. We can leave the storage capacity, the dispensing capacity right in place, and we just start receiving cheaper hydrogen because that's what local economics dictate. In the meantime, we go from a point to, call it a seed, if you will, to something that looks like a branch along a corridor as you start stacking a couple of these along one another. And once you get off that trunk, rather, you start making branches off of that as you develop this network, kind of organically, as opposed to trying to build it all at once as they're doing in California.
Right. And part of building that network has a real estate aspect or dimension of real estate associated with it. How are you thinking about land acquisition and especially in cities, there is a high degree of NIMBY activity, and a local politics can be a big rate limit to building such hubs.
And
that's what your thoughts are on that.
Yeah, absolutely. And that's another place where I think that we have, a very elegant solution here in terms of, being able to put something in that is very small, that is containerized and is modular so that it can fit on, marginal pieces of property. Everybody that we've spoken to thus far, we're not talking about acquiring the land. We just want the offtake agreement, the contract that goes along with the fueling of those vehicles. So we're not in it, as a real estate play. We're in it as a grab on that early contract in order to set up that early market share. And thus far, given the size of what we have and the configurability, the flexibility that goes along with that, we're not meeting any resistance. These can be sited in a parking lot pretty easily.
This might be a dumb question, but if it can be put in a parking lot so easily, why not franchise this to gas station owners and say your future is dead unless you roll out something like this? They pay you, then you don't have all of the complexity.
Yeah, and then that could be okay. Again, a gas station typically doesn't have an awful lot of real estate with it, and nor does it necessarily have that devoted fleet. So we would happily site, with a gas station, but really we're agnostic as to, where we site, as long as there's sufficient land and the presence of those centralized fleets. So for example, here in Denver, we're associating with a group that is doing revitalization around the National Western Center, around a disadvantaged community that has been very transportation impacted, from perspective of pollution, as well as having interstates that have actually cut up the neighborhood into quadrants. And so there's actually a strong interest from the neighborhood in trying to lead with both the zero emissions alternative that would help benefit their emissions in the local area, as well as potentially putting them at the fore of what would be a large growing industry.
And you mentioned solar earlier to power this. Are you still dependent on local electricity grids, or is that solar enough to power the electrolyzer? And if you are, then how do you think of siting where maybe the grid is already pretty strained?
So we are clearly focusing, we don't want to deliver hydrogen. There are costs and problems associated with doing that. We would rather produce on-site fossil-free hydrogen. Yes, we are absolutely pulling off of the grid because of that. We don't, especially if we're located in, an urban area, as we anticipate our first one to be, we're not going to put up a field of solar or large wind to bring that into fruition. We have the opportunity potentially to source green electrons from, with some kind of a power purchase agreement, or as an integrator. Again, we're actually speaking with a tech company that can quantify, through their knowledge of what's actually on the grid and at a very local level, the presence of green electrons or not on that system. So we're looking at these as different ways to take advantage of the incentive production tax credit that has been put forth in the Inflation Reduction Act. Because clearly there's a big incentive to do that, up to $3 per kilogram on hydrogen, which could, come right off of trying to support even lower prices for hydrogen or providing more margin for our company.
Just a clarifying question there, what is the payback period on your electrolyzer for the customer?
Yeah, well, so the customer is not purchasing our system.
Okay,
There are some who've spoken that would like to, but we would like to provide hydrogen and fueling as a service, as I've indicated, so that we have that carry going forward into the future on all of the fueling that takes place. But that said, I've indicated that we're looking at the potential of as our systems. As customers grow out of our systems, we can, add on additional modules, but at some point, it's just not the most effective way to deliver or produce hydrogen in that particular location. So we could consider moving that. We're looking also at, how long would the term of required offtake exist for a customer, and we're thinking that we can get payback in the 3.5 year type of time frame on those.
Got it. Thank you.
When do you assume hydrogen will reach relative price parity with other fuels?
Yeah, so I mean, certainly the spike in diesel pricing over the last couple of years has helped out significantly. The efficiency, the greater efficiency of running a fuel cell electric vehicle versus a combustion engine helps out. Right now, roughly $5 equivalent diesel per gallon in the U.S. equates to roughly $10 hydrogen. The historical price for hydrogen in California at the retail pump has been $16 per kilogram. It has spiked up to $25. We see, we don't do any of our modeling based on anything. The highest we do it is at that $16 rate, and we want to be able to bring it down from there. And that's really a function of that equipment utilization. As we start getting into 80-90%, we're starting to get into a place where we maybe can provide $11 or $12 hydrogen, which gets close to diesel parity, and can do so without these wild swings in prices as well that we see in diesel and gasoline.
Parikshit, Shanice, any last questions for Seth? Well then, Seth, thanks for sharing what you guys are doing and what you envision the future of the hydrogen economy looking like.
Thank you so much.
Quick time out here for anybody watching. If you haven't subscribed, thestartuptank.com, hit subscribe on YouTube. If you're interested in applying for our accelerator, our partner in crime program, because, well, every company, especially climate companies, need a partner in crime to grow and scale, get those pilots and build things up to the point where corporates take them seriously. Check us out, forward.vc. And if you're looking to fundraise, forward.vc/VC database. We've got our entire database, 950 or so funds, incubators, accelerators, CVCs, all focused on climate, clean tech, and sustainability. You can find them all, sort by stage, sector, geography, and check size, and find your ideal investor. Now let's continue on with the program. And also a quick shout out for any of you who are in Switzerland. I will be at Start Summit, 23rd and 24th in St. Gallen. If you haven't checked it out, I was there last year and there were a ton of incredible companies. We've got some coupons and discounts in the show notes here. You can get a 30% off ticket if you're looking to meet great investors or great companies. It's definitely the place to be, especially for climate tech. And now, how about we hand things over? We've got two more companies. One company apparently missed the memo, so you guys get a little bit more time each. And Antonius, do you want to take things away with eevie and share a little bit more about how you guys are trying to kickstart climate action, activism, and engagement with corporates?
That would be awesome. Thanks so much for having me. Hey, everyone. I'm going to quickly share my screen. Please let me know if that works.
Looking good. Your 5 minutes starts now. Make good use of them.
All right. Thank you so much. So my name is Tono. I'm the co-founder of eevie, and we are basically building a B2B climate engagement SaaS platform. So a little bit different than the hydrogen topic that we had, but equally exciting. So just quick little intro on myself. Before starting eevie, I was working as a consultant for blue chip companies, helping them essentially create their climate commitments that we're looking at here. We see the exponential growth of the climate commitments being made by Fortune 500 companies. And I mean, it was really, really exciting times. It was really exciting to see that big companies are finally starting to take this seriously and finally understanding the importance of reducing their impact on the environment from a commercial perspective. But at the same time, it also started becoming extremely frustrating because it became more and more evident that the companies were just missing the right working cultures, the right mindset in order to even achieve and accomplish these goals. And I mean, just the fact that more than half of the company's employees who are supposed to live and implement these new ways of working don't even know about the climate commitments, just basically became very worrisome. And what I was seeing there, what started to play out was, as Peter Drucker famously said, that culture was going to eat strategy for breakfast. So I thought that would be a good place to get started with eevie. There we go. And that is why we built eevie, which is a climate engagement SaaS platform to help companies accelerate their ESG goal implementation. So with eevie, basically companies can build highly configurable climate campaigns that enable any employee to understand the impact of their day-to-day work on the environment, on the ESG goals of the company, and gives them a way to really plan in a very specific way, measurable way, on how to engage everyone to achieve their ESG goals. So how does that work? Basically, in a gamified experience, teams work on very specific goals that are being set through the campaigns. They learn how to improve their behavior during these campaigns. And in a behavioral design aspect, the eevie app helps everyone individually understand what their impact is from their day-to-day work and how they can adopt new behaviors in order to reduce the CO2 emissions of their day-to-day work in the process. They get rewarded in the process, and in order to help further improve the impact on our biodiversity restoration. So obviously we have lots of different things that can be done. What we realized very quickly is that essentially companies know very, very well what they need to do, the challenges to get the employees to do that. So what we started in the beginning is to build together with them campaigns that are very relevant to enable them to reach their goals. So eevie is a platform where the companies really build their individual campaigns themselves. We help them and support them to do that, but we're not the ones to tell them what to do, because we don't know what a manufacturing company can do in order to improve their production cycles. We don't know what a marketing company could do to have a more environmentally friendly marketing campaigns, but we know how to engage employees into improving their day-to-day behavior. So one example was that ABN AMRO, one of our customers, they invested a lot in order to set up an amazing waste management and recycling facilities and across all of their offices, with the result is none of the employees were actually using this, bringing in wrong litter from outside of the office, etc. So we created the Net Zero campaign together, where the employees were being engaged and rewarded for understanding what their impact is in recycling at work and helping them reduce on average 200 kilograms CO2 per employee per year through this program. So we provide measurable results for the Scope 3 measure.
1 minute warning.
Climate reductions. The market is humongous. What we're looking at, however, on the right-hand side is our current serviceable obtainable market, which is made up of 1 million employees working for companies that we've already signed today. So roughly 50 million ARR potential there, and another million and a bit of customers currently in our deal pipeline. The market is mainly driven right now over here in Europe, where we are through ESG regulation, which means basically the license, the rights to have free emissions is going to be gone halved by 2030 and removed by 2050. So CO2 is already at 100 euros per ton and is only growing. So this is a very expensive problem for them to reduce their emissions. We've already onboarded a lot of big corporate customers because they have a huge issue to bring this into the mass and really need all of their employees to engage. So we are working together for a couple of years together with Bayer, with DHL, with ABB, all the numbers where you can see. And how we do that is basically they pay a yearly license fee per employee.
Time is up.
Packages on for that, and yeah. So I wasn't quite.
No worries. How much are you guys raising? What stage are you at?
So we're currently at seed, and we're looking to raise 1.5 million in order to build out our platform and get more sales activities going, because there's huge potential, and we're basically just 12 people right now with 2 salespeople. So missing out a lot of opportunity at the moment.
No worries. So one quick question while I bring the other panelists in. You've got a lot of big brand names on as customers, but not a ton of revenue. What's the story?
So the story is quite simple. It's a completely new kind of solution that the big corporates don't know. They don't know what to expect. They don't know what value on their investment, what return on investment we're bringing to them. So what we're doing in the sales cycle in the beginning, with this being a very early market, is that we're starting off with POCs, where they're basically getting a small part of a division, for example, 200 employees on board, and then they pay me like $10,000 for 3 months to kind of trial it out, proof of concept. From these agreements, proof of concept agreements, we then move towards yearly licenses. Currently, the agreements we have on average are 3-year deals that they do with us, but it takes a bit of work in order to get through that procurement process. I mean, we're doing enterprise sales, so it takes a little bit time to scale that up, but we've done a lot of work over the last 1.5 years and are well into that. So this year we're looking at having 500,000 of ARR. Next year, hopefully 2.5 million ARR. So once you're in there, you not only have the ability to get quite good lock-in effects, but you also are starting to experience lots of network effects, because these corporates are basically like many big companies in one big company. So once you're in one, you can start expanding quite nicely.
What's your rate of success from POC to paid customer?
Right now, 100%. So we haven't had one POC yet that didn't turn into a customer. We still have quite a few ongoing POCs, but all the complete POCs have converted into customers. And as we said, at the moment, we have 3-year agreements with them right after that. So
it's a pretty good number. It's a pretty good number. Parikshit, you want to take things away?
Yeah, sure. I'm curious why you chose the employee level and not the corporation level. And I should disclose my skepticism with the question. I think when it comes to sustainability, a lot of the buck is passed on to the customer or the consumer by big corporations. Example, take shorter showers just masks the fact that big ag uses most of the water in California. I think I'm skeptical, and in spirit, I think more should be done at the systems level rather than the consumer level, because consumers shouldn't be penalized for consumption. We have to help them transition to greener, cleaner sources of consumption. So just I don't know if you have an answer to that.
No, that's a great question. I mean, that's a very good question in respect to the consumer. What we're not really seeing is that the employee is the equivalent of a consumer. The employee is part of the corporation as the company, and we're selling to companies to help them really accelerate their ESG goal implementation, which requires every employee, every stakeholder in that sense to play a part in that role, because you can't expect to be a net zero company when your employees are not thinking net zero in their day-to-day business activities, and when they're not considering CO2 impact as the equivalent of cost, right? So essentially, CO2 impact is cost for companies. And if you're being very wasteful with your CO2 emissions because you're not kind of have the right awareness and the right drive to reduce emissions of your day-to-day work, you're just creating lots of cost for the company. And on the other side, also, we've gotten a lot of demand from the companies because at the beginning, it's also quite a strong employer branding topic for them, right? So we have lots of young talent, which just is very cautious, especially over here in Europe, on where they're working. And nowadays, for them, it's very important also to know that they're working for a company that is moving towards becoming a sustainable company and not a company that's destroying the environment. So from an employer branding perspective, it's also very valuable to the companies. But yeah, at the end of the day, the quick short answer is it requires all of the teams, all of the individual employees to work together efficiently to have a CO2 efficient company.
Yeah. I had a question on what retention looks like, because at the end of the day, this is B2B to C, and corporate might have the willingness to pay, but they'll only pay if their employees are using it. So do you have those metrics?
Yeah, so right now we have basically we roll out a package. Let's say we take on a division with like 2,000 employees. Right now, on average, we have like 80% activation of all of the employees, and then we're averaging right now 50% monthly engagement across the entire year. So it's definitely something we can still improve, and we're working daily on and improving. But I think the first why we are managing to achieve POC to contract conversion is because a lot more employees are being a lot more active than companies even expect at the beginning. So within our POCs, we set kind of milestones on what we want to have as success criteria, and we're able to achieve these most of the times. It's
Yeah,
just at the end of the day for the employees, it's like their feedback is amazing, because they first of all see that there's something positive moving in the company. They're feeling engaged and involved into the climate agenda of the company, and not just the sustainability department. And on top of that, they're being rewarded on a daily basis for doing something good for the company. So it's a very engaging experience for the employees.
Yeah, for sure. And two-part question in response to that. The first is, you mentioned success metrics. What is your North Star metric for measuring the success of this app? And second, when you think of corporate ESG budgets, part of that is going to the employee directly in exchange for good adoption of practices, and part of that is going to you as an enabler. Do you have a sense of how that split looks like and how corporates are allocating their budgets?
So for us, the budget that we're experiencing at the moment is mainly being allocated essentially directly to us as an expecting return of investment on reduction of CO2 emission cost for them. So even though the employees are being rewarded, for instance, with seedlings that are being planted, that's also an investment the company has basically in order to increase their sequestration projects, biodiversity restoration projects. So we're not really, in that sense, being considered like a benefit for the employee at the end of the day. So I don't think we're taking any of that budget from the employees. So we're going fully into their CO2 emission reduction climate goal budgets, which Honeywell just, for example, released a study is much higher across the board than anyone would have expected, especially this year, which we're also experiencing. And sorry, could you just repeat the success criteria?
Yeah, what is your North Star metric for measuring the success of user engagement on your platform?
I mean, our key engagement KPIs are obviously activation of employees and monthly engagement activities. We have lots of different ones, which are kind of, we're aiming at having, for instance, 2 tons of CO2 reduction on average per employee, which is one of the KPIs we're measuring, or where we're heading towards. And another one that we're looking at is obviously the percentage of behavior change experienced by employees. So various ways to measure that through their engagement in the app. We're seeing on average per campaign a 50% improvement in their behavior. So those are kind of different KPIs we're looking at. Ideally, soon we'll be able to say like we can measure the cultural readiness or the climate culture readiness of a company, but yeah, we still need to scale a bit more within these big companies, because
and if I can interject there, how are you measuring the actual and verifying the actual carbon footprint and preventing companies from greenwashing? Is there, do you work with a third party verifier of the CO2?
Yeah, so we're in a transition, to be honest, right now. So we started out by estimating the CO2 emission reductions potentially per campaign that they were running. So we can do that very well, for instance, in terms of mobility, because as it's an app that the employees are using, we can track the coordinates, GPS from which we then calculate the distance traveled and the mode of transportation, so we can have very accurate CO2 calculations being done on that front. But on other sides, it's much more difficult to calculate to make very good estimations. So now we're transitioning towards actually taking their energy, waste, etc. data as a baseline, and to see how that is then impacted before and after a campaign has been conducted.
Is there a risk of you then averaging out, this is what their new carbon impact looks like, because now they're doing this and recycling and biking to work, and then they get lazy, or they did it and now, well, we did it once and yeah, I forgot about this, or et cetera, and they just go back to their average once you don't have the actual campaigns constantly going?
Yeah, I mean, that's where we'll have to look for long-term data to see how long-term the behavior change really is. At the moment, it looks like that we're being very successful at having months-long even behavior change results from that. But essentially, where we're actually wanting to head towards is that we're really enabling them to start building any kind of campaign for any kind of work that they're doing. The end of the day is that we want to empower them to say, okay, how can I do my marketing campaign? How can I do procurement? How can I do, so that to fundamentally change the processes of how they are working. And then it's just the way they do business that has shifted, and we've enabled them to adopt these new ways of working. And then once you kind of recreate a process, or if you change the way that you're working, it's going to be less likely that you're going to go back to old processes when you've updated to new, more carbon efficient processes.
What would be like 4 examples of actions that you actionably tell employees to do that drive real impact that employees actually do?
So one interesting thing we've been working on right now with one of our customers is that, so they're looking at their factories and their technical teams being very knowledgeable about the electric motors that they have in their production facilities. Electric motors make up 45% of global electricity use, and most motors out there are ancient. So there's a huge gains that can be generated by identifying old electric motors, but there are just hundreds and hundreds of them in these floors. So no one's actually going through, they don't have inventories to go through to identify old motors. So you actually need the technicians to be and engage them and reward them to identify these old motors, so that they can identify old ones, replace them with new ones, and have huge energy and carbon emission savings. That was one that was being built. There's other ones that are, for example, much more high level, where in fact really we're going out and we're engaging them to improve their business travels, to be more kind of climate friendly, to transition. I think now, I think I'm back. I was gone. So yeah, all right. Yeah, and then other ones that we're doing is like little things from like making sure that you're switching off your laptop instead of letting that charge, or having the way that you commute, as I said, the way that you eat in the canteen, so that actually if they are offering you vegetarian meals as an option, or that you actually take these on and not just eat the same meals that you were doing beforehand. And all of this is making a measurable reduction for CO2 in the workplace.
Is all the data anonymized? How do you avoid like a Jeff Bezos Minority Report of, I'm watching you over your shoulder, your bonus is bad because your climate footprint isn't good?
That's a huge topic, especially over here in Europe, where GDPR obviously is very prevalent. So any data that companies actually see is aggregated and anonymized. I mean, there are the leaderboards, but all of the employees need to opt in order to share that data, and at the same time are free to choose whether they want to put their real name in their profile, or if they want to make up another name. And then the whole solution is created basically in order to engage the employees to make positive action. So negative reinforcement is something that just doesn't work in this respect. So for them, the way that they engage in the depth of the data that they see is just for them to help them improve. And what the other colleagues see is just like how engaged you are, for instance, but they won't see that you drove with your Porsche to work, or they won't see that you ate a steak for lunch, or they won't see that you didn't switch off your laptop. They will see that you were very engaged and earned a lot of trees, and as a reward for that.
I've seen a couple of these climate-focused employee engagement platforms. How do you think eevie is most differentiated?
So the exciting thing is that we've been at this now for nearly 2 years, and we've learned and changed the approach a lot, because the first problem we were solving was actually the ones that we need to tell them what to do in order to work more climate friendly. But then we realized, like, either we have to be very specialized, like we had lots of farmer customers, for example. We could be very specialized in one niche and know very well on how to work in those different kind of lines of work, more climate friendly. But then we realized that actually there's a lot of hidden knowledge in these companies, and that there are lots of experts that basically just need a tool in order to build the campaigns, in order to engage employees. So the thing that we're doing fundamentally different is that we're not the carbon reduction experts, if you want, in any kind of field, but we're the platform that enables them to build any campaign that is relevant to their employees, and that these campaigns are then added to a library which become reusable for other companies. So we're kind of leveraging a network effect where we have already validated that campaigns being built or configured by customers were then reused by other customers and were then used as a basis to build another different campaign. So it's kind of this platform approach that actually takes us out of the, like, are compared to our competitors, takes us out of the bottleneck to be able to scale any kind of climate related improvement of how we work, and just to focus on making it as replicable and as quick to scale as possible for the customers.
Got it. Thank you.
How have you managed to attract so many large corporates to become customers? What's your sales process look like? You said you're a small team.
So the first thing we do is we're very lucky that they actually have this huge problem. So they're looking for us, so we don't have to go out and educate them. They'll actually say, like, how do I engage my employees to be work more climate friendly? That's what they're looking for, and they'll find us in that term. And then we'll just try to convert them as quickly into a little kind of a paid proof of concept, which is not very expensive for them, where they can validate that this is actually the result that they're looking for, and that a platform, because that's the biggest question mark. Can you actually deliver what we need? Can you actually help our employees change their ways? Can you actually engage our employees? Will they actually use that? So we prove that very quickly in a proof of concept, through which we then actually get the advantage that we're already kind of circumventing the procurement a little bit. And that at that stage, when we then have to deal with procurement, we're already well established, so that we can actually then go through that procurement, data security aspect, which is very important, but which takes a lot of time. So we put that kind of long-term part of the sales cycle at the back end of it, after we've proven the value that we deliver. And then and then what we happen to do is that we create local kind of sales supporters internally, because they run the project, and then that's really successful, so they're really excited about it. So they really help us push through the sale then through the corporation, which is absolute must. Whenever we don't have like a local sales hero within the enterprise, it's just really hard to get that deal through.
Any last questions, folks? Awesome. Then Tono, thanks for pitching.
Thank you.
And
So
we would hand things over to our last, but certainly not our least company of the night. Was Company and Walter. They're developing industrial plastic materials. plastics you can use for industrial materials, because we're trying to use less plastics and make them circular, right, Walter?
Yes, of course. Hello, can you hear me?
Hear you loud and clear. You can share your screen and once you're ready, and then take it away.
Okay, thank you so much and nice to meet you. Let me share our deck. So can you see that?
Looking good. Take it away.
Okay, well, thank you for the opportunity and your time. Nice to meet you. My name is Walter Mata. I'm from Mexico. I'm the CEO of Was Company. Before I talk about Was Company, I want to talk about the problem. We are from Monterrey city in the north of the country, but currently we have a big problem, the environmental problem. We are the most polluted city in Mexico, and we was in the top 10 of the most polluted city in the world. So the principal factor of this pollution in our city is the construction industry and mining industry. So we know that this industry represents 50% of the global gas emission around the world. So that's why we create Was Company. Was Company is a science-based startup for the development of solution for this industry. Principal focus in develop of new sustainable building materials from the transformation of plastic waste, construction waste, and mining waste. So our last invention, though I say, is this new cement. Its name is zero waste cement. This cement we use and transform the mining waste of the industries. With this mining waste, we can produce filler, flyers, or the unique sustainable clinker. The clinker is the base of the production of the cement. So we have the unique of around the world and a sustainable clinker to produce and create a new cement. With this material, you can increase the compression mechanical properties to 20%. You can reduce the 100% of the explosion of natural resource, the reduction of carbon footprint, the use of water, and with a low or competitive price. Why mining waste? This is an example here in Mexico, well, in our city. This mining generate around 400,000 tons per year of this waste. So this waste is a big problem with them for them. So we know that they are working a lot of 20, 30 years working. So we know they have a lot of waste, like 20 million tons of this waste. So this like this, imagine, this is a new mountain of this waste. So we know that this is a big problem to this industry, but with our solution, we can transform this waste to create a new cement. No? And another type of product that we have is based on plastic recycled. This is one product that we have, the contact forward. This material substitutes the wood material in the construction industry. And in this application, the wood material you can use like 5 times, but in our product, you can use more than 100 uses to this application. Why? Because this doesn't absorb the water and resist the humidity. Have a low addition of the concrete and another type. The market size of this product that I talk is about, well, just in American continent, it used to $365.5 billion of dollars, but actually we are working.
1 minute warning.
Yes, we are working with this $1.7 billion. This is our tasting right now. We have our clients right now. They are using in different construction like skyscrapers, industrial waste residence, and in the future we have a project to build soccer stadium and the facade of one stadium. Actually, the last year our earnings is more than $90,000. but it's just to sell the samples of our technology. And we have actually lois to sales more than $3 million monthly. And well, we are raising our seed capital to 3 million to have infrastructure and machinery equipment to have the volume of production relationship of our lois that we have. Well, to increase to X.
Time
And-
is up.
And
Did you say how much? Did you say? Tell us a little more about your team while I bring everybody in.
Yes, of course. Well, I'm the CEO. I have partners like civil engineers with international experience develop new cement or type of building materials. We have a doctor of experience in polymers. So we have multidisciplinary experts in different materials. Well, two in financial and legal process with Pablo and others guys. No, so this is the principal team. Yes.
And how much are you raising?
3 millions, actually 3 millions. What to increase our production and have the volume of capacity to our clients right now.
And did you say you had a project to build a soccer stadium? Did I catch that right?
Yes, we have a contract to build all the facade of this stadium. All this is the facade. Well, it's based with recycled plastic. In this case, the clients talk to us to develop this new material. Well, the base is a plastic recycle, but we need to transform and create a new polymer composite with additive minerals to have the properties to this application. Also, that's our our value proposition to develop a different building materials.
Speaking of value proposition, there's a lot of different materials and there's a lot of things you guys appear to be doing. How do you compare to other recycled or circular concrete or brick providers in terms of carbon footprint and in terms of price?
Yes, of course. Well, that's a good question. We started with the transformation of plastic waste to create these plastic products, content for work, polymers. Sorry. Okay, so in the timeline of well that we are working, we have different opportunities with different partners like this mining industry or other type of waste management partners, because they talk to us to well, I have this, well, this is a case, I have this problem, I had this waste material for this industry. I don't know how to transform this waste, so we know that you have the potential, the talent to transform and have develop the solutions. But actually we have a good team with great experience to develop. So the difference principle, well, our value proposition is this new product because that are why I say in the world we don't have a sustainable clinker, but because the clinker, when you need to explode the natural resource to have like the caliza, this material, and then you can transform this material to the clinker. But actually, we don't have a sustainable clinker, and
Right.
this is the new sustainable clinker to
And
create.
just so I understand, sorry to interrupt, are you using mining waste as the clinker and then adding plastic waste as an aggregate, or are you doing it differently?
That's a good question. We have two different division of products. The polymers, that we create a new polymer composite to different plastic products based on 100% plastic recycled. But in this new segment is use this mining waste, transforming the mining waste to create a new clinker. and this clinker is the base of our new cement. And this cement you can use to aggregate to the structural concrete. So you can build with this cement towers and a lot of buildings now.
I see. So you have two different product categories.
Yeah, yes.
And are you advancing both to market, or you will pick one?
Yes, we have, well, the principal product that we are selling right now, this is a plastic products like this, the contact formwork. With this product, we have a different letter of intention of purchase with our clients right now, but actually we don't have the capacity of the big volume to produce this product to our clients. And well, and two, we have this project, and we are talking with cement industry like Holcim. We traveled to Lyon, France, in December of the last year to talk with the Holcim, well, the R&D center, to develop this technology with them. And we're talking with Cemex, Sika, and another type of cement industry, because the business model of this new cement is I need to sell the clinkers, the sustainable clinker, to this cement industry, and they can use this clinker to produce his cement. So yes.
Shanice, you look like you want to say something.
Yeah, I was just thinking of the construction value chain and the various parts of your business model. So like you could be selling to the developer, you could be selling to the general contractor, you could be selling to the producer of these building materials. Like, which one are you focused on now, and who within those orgs have you managed to get all your traction with?
Yes, well, in the category of plastic products, we need to have a plant, well, this infrastructure to have the capacity of production and sell these products to our clients. We have direct sales, because we sell to the construction companies, architects, civil engineers that they will use in his construction now. So, but in this new segment, actually we are registering the patent here in Mexico and USA to licenses, well, to give the licenses of this patent to the cement companies, and they will use this well, design of this new cement using this mining waste process by us. So that's our purposes and model. Yes.
Got it. And second question is, I recently looked at a company that was trying to repurpose mining waste. And one thing that they ran into is that mining companies are actually very reluctant to let people use their waste because it's subject to so much regulatory scrutiny. Is that something you've encountered, or how have you successfully like solved that upstream part of your process?
Yes, of course. Good question. We have a contract, exclusive contract with this mining waste. These mining companies well, extract or explode to produce like alkali minerals like calcium bicarbonate, sodium bicarbonate. It's like a commodities products, and we know that we have in Mexico more than 10 mining companies like this, and around the world, well, we have a lot of this type of mining companies. So all these companies have the same problem. This waste of this especially mining companies, they also have a way like how do you say, with different regulation or or is dangerous to the contact of the human. No, these waste doesn't have this problem. We know that all other mining companies have waste with dangerous things. So, well, this is step to step now. First, with this type of mining industries, so we have opportunity to escalate in Mexico and around the world with these mining companies.
Got it. And a separate question, you spoke about the LOIs that you had, and those are really impressive. Could you dive a bit deeper into them? For example, are there any pre-qualifications you need to meet before those LOIs come into effect? And then what's the timeline and scale of the projects that you have for those specific developments?
Yes, of course. Well, in Mexico, we don't have like big requirements, because in Mexico we don't have good norms or quality standards. Well, these are happy problems that we have, but we are focused to have the prototypes to the USA certification or requirements. So when we raise the capital, we invest in this machinery equipment, and in 3 months that we need to install all the machinery equipment, we can produce our products and sell it right now. So we don't have another of type of requirements in Mexico. And then in this Series A or Series B, we are planning to raise more capital to more infrastructure, but to install this machinery equipment in other countries like South America, in Peru, Colombia, Brazil. But principal in Mexico, expand our volume, and then principal to export to USA now.
If I can go back to the product, plastic waste and also mining waste is very heterogeneous. It's never the same thing going in, and there's a lot of different kinds of plastics. Many are deemed unrecyclable, right? And we just incinerate them or landfill them. To what extent can your process tolerate difference in feedstocks?
Yes. Well, to have the plastic waste, we have like a partnership with the principal waste management company here in Mexico and around the world. We have like Veolia, PetStar. PetStar is the most recycle of pet industry here in Mexico and around the world. So the plan is doesn't have the equipment to regulate these materials. The principal focus is buy these products, these plastic products, to transform this type of transform these waste materials to our technology.
What's the biggest challenge you foresee in actually doing that?
Well, the time, I think, because our focus or principal focus right now is substitute the concrete or cement, and with this technology. And we know the cement companies have a lot of time to change their design of this cement or their cement, because like Holcim and Cemex, they are using this material to experiment in his laboratory, and they have a good properties with this technology, but they need to use more in different experimental process that they have. So we know that they have their time, and you can is, how do you say, waiting for this process, and then They talk about the redesign of their cement using this waste material. No, this is the big challenge, but well, the focus or the principal value proposition that we are starting right now. This is the most important.
Is that the model you should be going for, to replace cement if they do need to do so much versus replacing bricks?
Yes, you can use this material to structural concrete, non-structural concrete, to create bricks, perforated walls. I don't know. These substitute the cement and substitute part of the concrete design. No.
I know you can, but I mean, you can build a stadium out of 3D printers, but you don't do it because it's too slow and expensive and too many changes that need to be made. That's what I'm asking. Is this too many changes to replace traditional concrete with these type of bricks? Can you attack a different market first before you try to scale this up?
Yes, of course. But about the soccer stadiums, is the materials is basis of plastic recycle, no this new cement. So this like a different, because it's different process. We don't have competitors to this type of faquera materials based on recycled plastic here in Mexico. So, well, that's okay.
What kind of capex would you need? And this is piggybacking off, Matt's question.
About capex, our team right now?
No. Like, will you have to build an entirely new kind of factory with processes that have, sorting the waste and then recombining the waste? Will you, I know clinkering is a process that happens at 400 degrees C in a kiln, and only big cement companies have these kilns right now, right? So will you create your own factory, or will you sort the waste and send it to a partner's factory and then take back the material from them based on what specifications you gave them?
Yes, about this, good question. Thank you. About these products, we are planning to raise other capital focus to this product, because we have, we will have the patent to license this, but we need a machinery equipment to process this waste material to create this clinker, no? So, but to have this machinery and equipment, we have a lot of money. It's a different type of rice that we know, because we are talking about big machinery that we don't know right now what how can rise, or what is the amount of this capital. But we know that these cement companies, they could invest in this type of products. The mining companies, or we know another type of VCs focus in these big projects, but actually this seed capital is focused to have our these plastic products that we need to sell. Well, we need to have a volume to produce and increase our revenues and net incomes, and then rise the next capital amount.
In terms of your team, what are the key skill sets that you think you still need to be able to fund the next phase of growth?
Yes, well, we are planning to have principal like marketing persons, well, chemicals engineers, experts in polymers. That we have one polymer expert, one cement expert, but we need more than this person, because we have we are a science-based company. So we are focused to develop, a lot of different technology for this industry. So we are working with this now. I think that is all.
You listed a lot of different kind of generic things that you need. Like I need marketing and I need sales and I need this and I need that. It makes it feel like you haven't thought about it or figured out a growth plan in terms of what you actually need to take the company to the next level. Take that as you will, just as kind of my feedback.
Thank you, Matt.
That would be, I mean, I don't know if the other investors have a different opinion, but that would be something I would say that seems to be a red flag, is there's a lot of interesting science happening, but the business side of things, it seems harder to see how that gets taken to the next level.
Well, we are open to different opinions and recommendations to have a great business model and scalable model. Thank you.
Yeah, I will say the spaces you're playing in are very hard to de-risk. So I actually appreciated how much you only talked about the product and the process today, and that's why your investor, whoever ends up leading your round, will play a big part in shaping the business with you. So, but to Matt's point, having a good use of funds and how you will use the money and build a business will become increasingly important from here.
Okay, thank you.
Any last questions, folks? Awesome. Then we got 10 minutes left to wrap things up. Say thank you, Walter, for pitching. You did an awesome job. It's a very cool technology. And God, I wouldn't want to be pitching in German. And you're pitching in English, so you're going through that. The second language, I'm sure, is an extra hassle as well. But now it's time to turn things over. We had 4 incredible companies present. We've got to pick our favorite of the night. Let's see if we can come to consensus. Who are we most interested by? Who do we see the biggest potential from? Who would you want to set up meetings with, etc.? Ladies first. No pressure.
Yeah, no, always happy to take that opportunity. I think the one that I am most excited about is Viritech. I've seen a few companies in the space and think that the systems lens that they've taken to their approach is pretty interesting, like being agnostic at both ends and focusing on the powertrain and that application in commercial vehicles. I also think they have some pretty cool traction with the partnerships that they've signed. So yeah, that would be my pick.
And Parikshit?
Well, since Viritech is taken, which was going to be my pick,
We can have a consensus. Don't worry. There's no problem.
I have a strong belief on the early stage. A lot of companies are really good. It's just at different pre-monies. There's everyone's building something great. It's just at different risk levels. I will say Wasco that just presented, I really liked what they're trying to do. Plastics recycling and embodying that material into drop-in materials that we use today, and novel clinkering is a big problem and comes with a lot of emissions. So I would actually pick Wasco because I see a lot of potential there, and I think I'll have fun talking about the business model and shaping the business with the founders if I were to take a deeper look.
Yeah, that would be an interesting one from an IndieBio side of things.
Mm-hmm.
I mean, for us and for me, I thought Was Company's interesting, but I'm a big believer you bet on the team and the founder. And I think you guys, from my perspective, that Walter, you guys are still missing someone on the team who is that core business, sales, development kind of guru god who can get the product out there, get it in the hands of people, get the the sales and the traction going, explain what you guys are doing, and simplify things. I think if you land that, then that could be a very, very interesting business. I'm kind of torn. I don't like your traditional vitamin businesses where we help reduce climate emissions by helping people do a better job of being better people kind of thing. So with eevie, I'm kind of torn because I'm very impressed by the amount of traction they've been able to get with the companies they have. But I want to see if that traction is able to turn into something really scalable and dominatable, something where there is a winner take most, at least of the climate engagement side of things. And there I'm a little bit skeptical. With Viritech, I was very impressed by what they're doing with the hydrogen fuel cells and what they're doing to bring hydrogen, but I've also seen other technologies in the space. I think ultimately if I had to pick one, I would probably say I would probably give a slight edge to, I have no idea what I'm going to say. I'll choose eevie and we'll make it a split down the middle. We'll say we have no champion. We had 4 great champions tonight. What do you think about that? Because I don't see any clear consensus winner happening.
Yeah, for sure. I definitely felt that each of the 4 companies today, I'm impressed that at the stage they're in, they've all managed to show a reasonable amount of traction. And that's really impressive.
Especially these days. Well, then, everyone, thank you for coming on. Thank you for pitching. Shanice, where's the best place for people to find you, learn more about PearVC?
Yep, you can reach me at shanice@pear.vc. I'll drop it in the chat.
Very cool. And Parikshit, I'm not sure entirely how it's pronounced. I'm trying to do my best.
Thank you. Yeah, it's Parikshit. Yeah, my email, I'll drop it in the chat. It's my first name dot last name @sosv.com.
Awesome. And if you guys are looking for a partner in crime for your climate company, check out forward.vc, the number 4ward.vc. We invest in companies that move the world forward. We cheat through our investor and mentor network, 140 plus mentors. Parikshit's one, Shanice is one. We've got folks at Honda, Porsche, HSBC, DOE, German Department of Energy, EDP, Johnson Matthey, kind of everywhere. And the idea is let's get the best people at the best places who are focused on climate and tech and make the connection so we can plug into industry, help the companies grow, scale, and get those pilots and traction they need to decarbonize industry, which is the only way we beat climate change. For more information, forward.vc, you can find our climate VC database there, join our climate founder Slack. And if you want to apply to pitch this, startuptank.com for our next session, which is going to happen in 2 weeks, March 20th. Be sure to hit the subscribe bell if you're anywhere, or if you're listening on a podcast, well, subscribe there too, leave a review, yada, yada goodness. Thanks everybody for pitching. Thanks for tuning in. And until next time, go make it happen.